Assalamu alaikum, good day, and a very warm welcome. Corporate income taxation and its impact on free zone, one of the most important sought after issue. This needs due attention, and today at MBG, we believe knowledge shared is knowledge gained. Hence, we go into all elements and dimensions of area we serve our clients. While experts will decipher some of the very recent announcement and clarification, we seek your feedback and further queries in this or related areas. In times to come, we'll cover more areas. So, as an audience, if you have any question or suggestion, please do share as well. In today's podcast, I'm your host Naresh with decades of experience across Africa, India, and Middle East region in the field of compliance, controllership, taxation, risk, and strategy. And my co-host Lydia from European Enterprise Group. She has been managing Middle East and India operation, business development, and marketing initiatives. We have expert Mr. Manoj Pandey, CEO, Corporate Taxation. He has decades of experience across multiple areas of the law, as well as experience in various geographies. And currently, he is based out of Abu Dhabi. We also have Komal Grover. She is Executive Director, Corporate Tax, and also has multiple years and multi-country experience. Going straight into the core, decision number 55 of 23 for determining qualifying income for qualifying free zone persons under the CT law has been issued. Further, the Ministry of Finance has issued ministerial decision defining the term qualifying activities and excluded activities for the purpose of CT law. So the key question is, who will be qualifying free zone person under the law? Manoj?
So we had a lot of confusion around this issue because we had a public consultation document and there was a lot of waiting for clarification. Thankfully, now the law is very much clear. So, as per the law, which is Article number 18 of the Corporate Tax Law, it clearly defines, provides the criteria where a person will be regarded as a qualified free zone person. So the conditions are like the first is that a person should be a juridical person incorporated in any UAE free zone. When I say juridical person, it means that it cannot be individual. It has to be a juridical person, and it has to be incorporated in any of the UAE free zone. In all the S7 Emirates, it will be accepted. The entity or the qualified free zone person should maintain adequate substance in a free zone. That is the second condition. When we say adequate substance, this basically means that it should have a core income reporting. And secondly, it should have adequate asset, it should have adequate employees. And if there are any outsourcing activities, those outsourcing activities can be done with the related parties in the free zone or with the unrelated party in the free zone. But the condition is that the qualified free zone person should exercise control on such outsourcing activities. The third condition is that such qualified free zone person should derive only qualifying income. And when we say qualifying income are defined with respect to qualifying activities, and those activities are per se with respect to goods and some services and some ancillary activities which should also be pertaining to those goods and service activities. So those are qualifying activities that should be all the income should pertain to those qualifying activities. And if there are any non-qualifying revenue, those non-qualifying revenue should not exceed 5% of the total revenue of the free zone or 5 million AED, whichever is less. Besides, the free zone person should also has to elect to be subject, should not elect to be subject to corporate tax, and the qualified free zone person needs to maintain an audited financial state. Besides, the qualified free zone person should also comply with the arm's length principle of transfer pricing. These are the broadly conditions which has to be fulfilled, and there are a lot of areas where we need to exercise subjectivity. For example, when we have to determine the adequacy of the substance, so this has to be correlated with the activity, with the revenue, employees and assets, and then accordingly a decision has to be I hope I was clear on this point.
Yes, thanks Manoj, and thanks Naresh, and hallo, guten Tag and good day to all listeners today. I'm very excited to be part of today's discussion and truly believe this is a very interesting and important topic for everyone here. So I would therefore directly start with a question for Komal. Komal, can you please elaborate on maintaining the substance? What exactly does it mean and what is qualifying income?
Thank you, Lydia, for that question. And I think a very relevant question in the context of free zone persons and who will be qualified as a qualifying free zone person. So as my colleague mentioned, maintenance of adequate substance is a prerequisite to qualify as a qualifying free zone person. Now, as per the clarification, a qualifying free zone person which undertakes core income generating activities in a free zone and has adequate assets, an adequate number of qualified employees, and incur an adequate amount of operating expenditure having regard to its level of activities in the free zone shall be said to have adequate substance. So, every entity, every company which is set up in free zone needs to test all these parameters for its presence in the free zone to determine whether adequate substance is met or not. In the law, it has been further clarified that activities can be outsourced to a related party or even to a third party in a free zone, provided that the qualifying free zone person has adequate supervision of the outsourced activity. So it's a very subjective exercise, and based on the facts of each case, this test needs to be determined. To answer your second question, Lydia, what is qualifying income? The law has defined qualifying income in two separate categories. There are certain incomes which are included within the categorization of qualifying income, and there are certain categories of incomes which are excluded. To give a brief overview, activities or incomes which are include three broad categories. One, any income which is derived from other free zone persons, except the excluded activities. Second, any income derived from qualifying activities undertaken with a non-free zone person, except the excluded activities. And third category is any other income subject to satisfaction of the de minimis requirement. So these three types of or categories of incomes have been included within the definition of qualifying income. In addition to this, the law has further prescribed a list of activities or incomes which are excluded. For example, any income which is attributable to a domestic permanent establishment or a foreign permanent establishment is excluded. Second type is incomes which are attributable to ownership or exploitation of immovable property. Third is income derived from any person which is specified in the excluded activities list. And last is incomes derived from a non-free zone person other than qualifying activities. So as you can see, it is not a straightforward segregation. For each free zone, it would have to be tested as to what incomes they have, where is this income being derived from, and accordingly determine whether it is covered as part of the included category list or excluded. I hope that clarifies.
Okay, thanks for clarifying that. Maybe for in our international audience, Lydia, if you can elaborate what exactly is a free zone and what is other than free zone.
Yeah, sure. In UAE, you have either the option to do business in a free zone or the so-called UAE mainland. The biggest difference between mainland and free zone companies is that a free zone company cannot do business outside the free zone without the help of a local agent. So mostly free zones are being used for import and export business. The restriction does not apply to mainland companies who have permission to operate everywhere in the UAE. Exemption from import duties is also a key benefit for free zones. Free zone licenses are allowed to do import of goods and equipment into free zone from a foreign country without payment of customs duty. Further, previously a foreign investor needed 51% local shareholding to do business in the mainland. However, there have been some regulations in the last year, and now even in the mainland, it is allowed to do 100% foreign ownership for business activities. Every year our firm MBG is also preparing a free zone report in which we are looking at free zones in Dubai. In this report, we are looking at real estate pricing, packages that the free zones are offering, as well as competitive advantages. Some of the free zones, for example, are very specialized. For example, DMCC for commodity business, DIFC as a financial free zones, or for example, JAFSA, who are focusing on logistic warehousing and trading.
I think that was very helpful, Lydia. I think let's get to the key point here, and which is the most important point. Which income is included and which income is excluded from taxable purpose? So Manoj, if you can elaborate on that.
Yeah, so law here clearly, clarifies that which are the income which are included and which are the ones which are excluded. So the included income categories are basically the categories where the income pertains to the qualifying activities. So the qualifying activities have been well defined under the clarification, and this pertains to goods. So for example, if an activity is like, if a qualified free zone person undertakes an activity of manufacturing of goods or materials or any processing of goods or materials, so manufacturing is all covered. Now distribution of goods or trading of goods is also covered, provided that it is being managed from a designated zone. So if it is managed from a designated zone, then distribution of goods is also covered with certain conditions. And those conditions we have to go in detail, such as whether the recipient of goods is using it for his own purposes or not. This is for goods. Then we come to the services part. In services, it covers basically the 8 categories, and these 8 categories include like fund management services, like financial advisory services, reinsurance services, and ownership and management and operation of ships, and headquarters services to related party. There's certain treasury and financing services to related parties, and financing and leasing of aircraft, etc., and then logistics. So these are 8 categories of services which are defined under this service list. And in others category, we have activity of holding of shares and other securities. So holding company is also covered. So broadly, if a qualified free zone person undertake these qualifying activities, then these will be categorized as incomes included. In the same way, we have also some categories of income which are excluded in nature, and they have also been defined, such as any banking activities if it is subject to regulators, any insurance activities if subject to regulators, financing and leasing activities, ownership or exploitation of immovable properties other than a transaction in respect to free zone commercial property and other free zone person, and then ownership or exploitation of intellectual property assets. So these are certain excluded activities. What is most important here is that any transaction if you incur with natural person, that also is an excluded activity, provided it is not falling in some of the categories of services. With that we have to dealing case by case, such as if a qualified free zone person enters into an activity with a natural person with regard to ownership, management and operation of ship, then such activity will be included and not excluded. So we need to go case by case and then only figure out as to which activity is included and which activity is excluded. For the non-qualifying revenue or the revenue which is coming from excluded activities, we also need to do the test whether such revenue is meeting the criteria of 5% of total revenue or AED 5 million, whichever is lower. And if that is meeting this test, and if it is less than this threshold, then this income will also be categorized as a income which will fall in the included income category. So I understand, this is quite complex because there are so many list of activities that we have to refer to, and one has to go in detail to find out. And there is a tabular computation methodology that we need to comply with to ascertain very surely that the total revenue, non-qualifying revenue, the qualifying revenue, all is calculated correctly and exemption is taken in a right manner. So I hope it clarifies.
Komal, would you like to simplify and elaborate on this?
So I think the moot point here is that if you are a free zone person, first you have to identify and test that you are complying with all the mandatory conditions, which includes substance, which includes deriving qualifying income, which includes complying with transfer pricing regulations, which includes maintaining audited financial statements, and which includes that the non-qualifying revenue of the free zone person should not exceed either 5% of the total revenue or 85 million, whichever is lower. So these are the prerequisites for a free zone person to fall within the category of qualifying free zone person. Then, of course, comes the determination of what is the activity that you are doing as part of a qualifying free zone person. And as Mr. Manoj mentioned, that there is a long list of activities which are considered as qualifying. Then there is a separate list of activities which are excluded from this taxability regime. So every free zone person has to test all these conditions parallelly to determine whether and which part of income is going to be subject to taxation.
Can you also elaborate on specifically about immovable properties?
Sure. So as per the clarification, income which is attributable to a immovable property which is located in the free zone will be considered as a taxable income, which will be subject to corporate tax at 9%. Now the law defines two categories of incomes which will be covered in this clarification. One is transactions with a non-free zone person in respect of commercial property, and transactions with any person in respect of an immovable property which is not a commercial property. And then the law further goes to the extent of defining what is commercial property. So any immovable property which is used exclusively for a business or a business activity and is not used as a place of residence or accommodation like hotels, motels, bed and breakfast establishments, service apartments, these will be covered in the commercial property definition. So any immovable property which is used exclusively for business or business activity and which is not used as a place of residence or accommodation, which I just mentioned, these will be covered in the part of commercial property. So transactions with a non-free zone person in respect of commercial property, transactions with any other person in respect of an immovable property which is not a commercial property, these will be considered within the taxable list and will be subject to tax at 9%.
Thanks, Komal. I have another question. Manoj, can you elaborate more on the qualifying and non-qualifying revenue?
Yes. So the qualifying revenue per se is something which is not taxable, and non-qualifying revenue will also not be taxable if it is less than 5% of total revenue or 5 million, whichever is less. So when we have to determine the qualifying revenue or non-qualifying revenue, what we'll do is we'll first see the total revenue of the free zone person, and out of this total revenue we will reduce the revenue which is attributable to a foreign P, or for example which is attributable to domestic P. We'll also remove the transaction with regard to the immovable property, and then we'll determine this is the total revenue of the qualifying free zone person. And out of this total qualifying revenue of the free zone person, we will also match this revenue one by one, that how much of this revenue stream is coming from qualifying activities and how much of this is coming from the non-qualifying activities. So whatever is coming from a qualifying activities, that will be taken as an exempt revenue, and anything which is coming from an excluded activities and which is not meeting the test of the 5% threshold, this all will be a non-qualifying revenue, and that will be a taxable stream. So for each qualified free zone person, we have to clearly divide two segments, the taxable one and non-taxable one. Taxable one will be for the qualifying activities and non-taxable one will be for the excluded activities or for the activities which is not coming from the qualifying activity. So this is how we can simplify, and this is how the taxation will apply. Of course, if the free zone person has a domestic PE, that will be separately taxed. It will be under the tax bracket without even availability of the basic exemption of 375,000. And same way, if there is a foreign PE of the qualified free zone person, it will also be taxed in the same way like a domestic PE.
I think that simplifies quite a bit. So Manoj, if you have to summarize free zone taxation, what are the top 3 things all the businesses should make note of?
Well, the first and foremost thing is that all free zone person will not be qualified to be exempted first. And the other important point is that when there is a taxable segment and when there is a non-taxable segment, and there are some expenses which are common in nature, then it becomes very difficult, that how much of this expense you should apportion or attribute to the taxable activity or non-taxable activity. Because the tax authorities, they will also always say that, the expenses pertains to the non-taxable entity and doesn't pertain to the taxable entity. So each free zone person will have to maintain a very robust documentation when it comes to attribution of common expenses, or when it comes to maintaining or transfer pricing documentations. And free zone person will also have to be very careful and mindful when they are having any branches or they are dealing with mainland entities, because the law says that in such a case there could be a possibility that free zone person may be regarded to have a permanent establishment in a mainland area, and some of the revenue can be taxed because their activities are too much driven to the mainland. So this law per se is quite complex in nature, and when we as a consultant, when we will take a call, it has to be a 360-degree evaluation on all the conditions, on all the activities, on seeing the substance, on seeing the documentation, and then taking a 360-degree view that whether you are a fit entity to claim an exemption, or you should be elected as a taxable. And also the foremost thing is that we also need to see what is the level of profit. So let's say if a company doesn't have an adequate profit, or if it's still making a losses, then there is no point going for the exemption. Another thing is that if we go for an exemption and later on, if these conditions, which are quite complex also, these are not fulfilled, then the exemption is withdrawn not only for that year but even 4 years prospectively. So as an entity, as a qualified free zone person, you lose the right to claim exemption for 5 years, which is quite a setback. So one has to be extremely careful when you are evaluating whether the exemption is eligible, you are eligible for the exemption or not.
Great. I think any lasting comments over the topic?
I would just one more point here. All those companies who have presence in free zones as well as mainland, those companies have to be very careful while evaluating the applicability of qualifying free zone exemption, because the clarification has introduced a concept of a domestic permanent establishment, which would be very relevant while determining the taxability of a free zone person, especially where the qualifying free zone person has any business which is outside the free zone. So those aspects also need to be kept in mind as the evaluation begins.
Right. Lydia, I believe you wanted to add some comments from your side as well.
Yes, actually, I think while prima facie it seems for many companies that corporate tax will not have an impact on free zone entities, it is actually highly advisable that companies, especially those with foreign shareholding, get their impact assessment done timely in order to mitigate any tax risk. And I strongly believe that MBG, we have more than 20 years of experience in corporate tax across various jurisdictions, is extremely well placed to support these companies. And I would like to therefore invite everyone also to drop their questions in regards to today's podcast. Last but not least, I would also like to thank the listeners and request for some feedback via our official email ID uae@mbgcorp.com. Thanks, everyone.
I think that will be quite helpful. Komal, maybe before we go from business perspective, beyond Freezone, any other connecting dots that one should be aware of or pay attention?
So one key aspect is for all those companies which have, as I said, which have dual presence, including free zones as well as in mainland, those entities must very carefully evaluate whether they are eligible for the free zone benefits for their free zone presence. There could be many companies who have branches in free zones, or a free zone company has branch in the mainland. Those aspects need to be very carefully evaluated. Now, there are various other provisions which are applicable to entities or compliances which have to be done for entities beyond free zones. So all in all, it is recommended to start a thorough and a comprehensive review so that your first tax period can be prepared and you are ready for your first tax period in a much more efficient and effective manner.
Okay, thanks, Kamal. Thanks, Manoj. Thanks, Lydia, for your time. I hope the session will be helpful for our audiences. Thank you so much.
Thank you.
Thank you.